Hey, what's up guys, John here. We're walking into a car market crisis to the likes in which America has never seen before.
New car purchases are becoming more out of reach for many shoppers.
The average car price is now more than $48,000.
Americans are struggling with the rising cost of everyday items, falling behind in some cases on expenses like car loans.
But it's not just America. This is going to be a worldwide phenomenon. What's going to happen with cars? Millions and millions of cars are going to be ripped off the roads in the next year or so. I saw this video on Twitter about 15-20 minutes ago. It's already accumulated 100,000 views the first hour. 100,000 views the first hour. I'll refresh the page right now and you can see exactly how viral this video is going. This is from a person that owns a car right now saying, you know what? This new insurance premium has gotten so out of control, I have to make a decision. Who am I going to pay? My insurance, my car note, or my kids?
Insurance rates are skyrocketing nationwide.
Car insurance premiums have increased nationally 17% in the first 6 months of the year.
This is where things are going because she's got to feed her kids, right? This is what the world has come to. Look at this. 99,600 views. I'll refresh it. And now it has, let's see here, 140,000 views, right? In the last couple minutes, right? It just accumulated another 50,000 views. I'm going to show you this video. I'm going to show you exactly what's going on and show you what to expect in the auto market. Please hit the like button. When you hit the like button, YouTube will share this content to educate more people about what's going on. And if you'd like to fix your credit, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free strategy session. Take a look at this. So
I have £1,200 saved up.
She has 1,200 pounds saved up. Average American, what is their savings? The median savings account balance in the U.S. is $1,200, right? So this is spot on.
Ready for when my insurance comes for renewal. That is not going to cover how much insurance has gone up by. My insurance quotes are coming back at £1,800 minimum. Which is £200 a month. £200 a month because they don't stick it at 1,800. As soon as I have to move that over to monthly pay, now it's 2,500, which means I'm going to have to pay £200 a month car insurance, meaning what right now leaves me with £600 a month left over my bills. I'm going to be left with £400 a month. That's to pay for my food shopping. That is to get everything else I need, travel to work, everything. And yet I'm supposed to be what you are calling the perfect example. But no, I'm not, am I, Rishi? Because the only way you're a perfect example in this state, in this economy, is if you're in a couple and you're both working and you're both paying for the bills.
This is where the world's going. This is where the world's going, and it's going there so fast. This is like a speed train. When you look at what people are searching right now on Google Trends, cheap car insurance, skyrocketing. Cheap car insurance, skyrocketing. Give back car, skyrocketing. Well, it's only the 5th of December. Give it a couple more weeks. You'll start to see this really pick up because this right here is November, right? All the way at the top. So you look at what's happening. If you look at how much car insurance rates have went up in just the last 12 months, CNN's reporting 19% compared to a year ago. You have Forbes saying 17.8%. I mean, you start to look at these numbers. Kipler saying 14%, NPR 19%, 17%, 17%. You start to see these numbers. What you're going to start to see is a very, very, very big problem, especially not just for consumers, but also for these car dealers, for the people that have these cars to sell, because there's going to be so much inventory going back to these lots, they're not going to be able to sell them. And that's why if you look at all these cars, top 20, right, you look at how much these cars are dropping in price. Thousands and thousands and thousands of dollars dropping in price. But also, this, I believe, is only the beginning of the problem because the average car loan is 125%. 125%. So on a $50,000 car, there's a $62,500 loan on it. Pretty crazy, right? $62,500 loan on it. But take into consideration that used car values have already tumbled 16%. So not only is this a situation where it's the $12,500 that they're underwater on, but now this extra 16%. So people are going to start opening up the door to their apartment, their house, see this car in the driveway that they can't afford, they can't put gas in the tank, and they owe, a lot more on it than it's worth. They're just going to give the keys back. That's what we're walking into right now. Walking into the holiday season, people are going to be spending more and more and more. Come January 1st, you're going to start seeing defaults left, right, and center on bills and debt obligations. And then look at this. The average car payment in America, $729. And 1 in 4 Americans in Texas and Wyoming committed to paying more than $1,000 per month on just their car. Just the car, not insurance, not gas, not maintenance, nothing. $1,000 a month. This is absolutely insane. This is the biggest bubble that we've ever experienced. I mean, look at where rates are right now. If you have bad credit, 300 to 500, 21%. It's like a credit card, right? If you have, subprime, 501 to 600, 18% and change, right? Non-prime, 13.53%. Most people in America, they don't have 780 credit scores. Most people in America are in the mid 6s, then the high 5s. That's where most people really sit. They'll tell you, the average is, 700, or the average is, like right here, Business Insider saying the average FICO score is 718. There's no way that's the average. There's no way. They say here on Equifax it's 698. Look, I own a credit repair company. We're talking to people every day, all day long. The average that we're seeing, of course, people that are coming to us need assistance, but the average we're seeing is somewhere in the mid 5s to low 6s, right? If you have just one late payment on any bill, one late payment can drop your score of 180 points. So to say the average is somewhere around 718, the perfect credit score is 850, and almost nobody has that. So trust me, the average is nowhere near mid 7s or low 7s. But when you look at what this would look like, if you were to buy a car with a 14% interest rate, $40,000 purchase price, $930 per month. $930 per month. That's like a new Honda Civic, right? That's a nice Toyota Camry is 40 grand, maybe even more than that. So when you start to really look at where things are headed, rejections are more than double last year's rate, 5.2%. Banks don't want to lend. They don't want to lend on cars like they used to. And for good reason. For good reason. Look at this. Now, a government mandated interest rate cap. This is what they're pushing for. Government mandated interest rate caps on loans. And so when you're seeing this, you have to ask yourself, if you're a lender right now, would you want to lend on an overpriced vehicle to a borrower that can most likely not pay? Probably not, right? You probably wouldn't want to do that, especially if the government's going to start introducing some type of protections for consumers, aka, less upside for you as the lender to lend money into a very risky loan. You probably wouldn't want to lend it, right? So here's what they're talking about. A government mandated interest rate cap presents a dilemma to lenders, extends either credit at a rate that does not include the default risk or deny credit to a large swath of potential borrowers. This is what I think we're walking into. Massive credit contraction. And not just on autos, not just on personal loans or credit cards. I think across the board we're going to start to see this. And the main reason is defaults. People are not going to be able to pay their obligations in 2024 like they were able to in 2021. The disaster of the savings rate loan crisis of the 1980s taught banks an important lesson. Government-mandated mortgage interest rate caps ultimately led to a financial meltdown as lower credit borrowers defaulted. Lenders would roll back credit rather than risk another surge of losses. Ending the scourge of Bidenomics requires rediscovering the path to better family well-being, reducing federal spending, and they dive into this. But when you start to look at what they're doing and what is actually happening here, you're going to start to see that when you have a situation where most people that were going to buy a car did so over the last couple of years, not many people are going out there, looking to shop for a brand new car in early 2024. So what are you going to have? You're going to have the lots continue to get more and more and more full. And how many people are going to go out there and say, you know what, maybe I want to, do any type of transaction. The people that are going to be doing these transactions are going to be people that are forced to give the keys back, right? People forced to downsize their vehicles. That's what's going to happen. We're walking into this situation, and it's not just this lady talking about what she's going through. You have over 200 million Americans over the age of 18 years old, most of which own cars, right? 200 million Americans. I would probably say somewhere around 70-80% of them. I would be surprised if anything less than that owned a vehicle, right? Most of these people own vehicles, 70-80%. And so when you look at this, and that's a ballpark guesstimate, if you look at this, most people don't live in the cities. They don't live in New York City to the point where they don't need a car. Most people drive to work. When you look at this situation, you're going to see a problem when the world gets much more tough, that they're just going to give the keys back. And when that's what we're walking into now. They can't afford the insurance, they can't afford the gas, they can't afford the payments. It's going to be a really big crisis in the auto industry, and I think one of the biggest bubbles we'll ever see in our lifetimes. I believe that this is going to present a big opportunity if you are someone looking to buy, because there's going to be so many dealers desperate to unload this inventory. I think there's going to be some really, really big opportunities, but you want to definitely position yourself for this opportunity. You're going to want cash in the bank because it's going to be harder to get loans, much harder than it was in 2021. You're going to want exceptional credit. You're going to want to put yourself in a really, really strong position. You don't want to have a repossession on your record, that's for sure. You want to put yourself in a really strong position. This goes above and beyond just the auto industry. This is going towards credit cards. This is going towards personal loans, business loans. You want to put yourself in the best position possible because lenders across the board are seeing the writing on the wall that we're walking into a very, very, very big problem. What do you think about this entire situation? Drop below. We'll have a conversation about it. And if you'd like to fix your credit, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, go to GreatCreditFast.com. Schedule a free strategy session, a completely free strategy session. We'll go over your credit report. I actually just hired a couple new people that work directly with the credit bureaus in the disputing department. They'll go over your credit report with you. They'll tell you what it would likely look like to fix your report. And if it makes sense for you, we'd love to help you. And if not, no worries, we'll cancel. You won't charge you a single penny. You can book a call below at GreatCreditFast.com. I'll catch you in the next video.